G'day there, Ray Corcoran here. In this week's video, we're going to be talking about how to improve your credit score. Having a good credit score is really, really important. If you ever want to go to the bank and get a personal loan, a business loan, car loan, home loan, you're going to need to have a good credit score. And the good news is it is, pretty much free to improve your credit score, and it may take a little bit of time, but anybody can do it, and the benefits are pretty significant. If you have a low score, typically you'll get worse interest rates, so you have to pay more per month in interest. You'll often get lended less money, or you may not get approval at all for loans. And if you have a high credit score, you get a whole bunch of benefits, including the best interest rates available, so you pay less per month in interest. You also get more likely to get your credit applications approved. And also you just generally get a lot less BS when it comes to applying for loans, and usually you can get larger amounts compared to other people. So the first thing to understand is you don't just have one credit score. So there's going to be multiple different agencies, credit reporting agencies in each country, and there's a few major ones. In Australia, we have EQUIFAX, Experian, and EQUIRIES. EQUIRIES used to be called Dun & Bradstreet, for those of you that may not be familiar with them. And then in the States, the main ones are TransUnion, Experian, and EQUIFAX. So an important thing to note is that the credit range depends on what country that you're in. So in the States, they're typically from 300 to 850. In Australia, Equifax is 0 to 1200, and Experian and EQUIRIES are 0 to 1000. In Australia, an average credit rating would be somewhere between sort of the 550, 600, 650-ish range. In the States as well, an excellent score would obviously be 850 and 800 and above. And average score is also around sort of the 650-ish mark, give or take. In terms of checking your credit score, so what I do in Australia, there's a site that I use called getcreditscore.com.au. You just log on there, fill in some personal details, and then they will give you your score. And in the States, one of the main websites is annualcreditreport.com, and they'll actually give you a score from each of the three main credit reporting agencies. In terms of having a score, my current score with Equifax is 1093 out of 1200. So the score has gotten pretty good over the last few years. To be honest, I haven't really noticed dramatically, my life hasn't gotten way better or anything like that as a result of having that, but you probably just get a little bit less BS when it comes to applying for loans. So say for me, for example, I've been looking at buying investment properties over time, and obviously the more loans that you get, the harder and harder it is to get approved typically. And having a good credit score does help in that regard, because they're more comfortable lending it to me because I have a track record of paying my debts and all that sort of stuff. So it's really important for yourself to make sure that you do build up that positive track record, regardless of whether you want to take loans or not. I think the kinds of habits that you'll have by building a good credit score are good habits to have regardless of whether you want the money or not. So now we're going to go through what you need to do to improve your credit score. So the first one is credit utilization rate. So this is really important, and a lot of these tips are kind of counterintuitive when it comes to having credit. The credit utilization rate is basically like how much of the credit that you have available to you do you use. So if you have a credit card and you have a $5,000 limit and you've spent $1,000 on it and you're making minimum repayments, then your credit utilization rate is going to be 20%. And generally the goal is to make sure that you have the credit, but you don't use the credit, which is kind of silly, but it just shows that you don't need to be using all your credit all the time. If you have multiple credit cards and you've got debts on all these credit cards, it's kind of showing that you kind of need to be using these things all the time, which can be a bit of a concern for credit reporting agencies, and banks do get a little bit concerned when they see that. So basically just make sure that you're paying off, you're not using the credit card unless you need to generally, unless you're doing some sort of like, credit card points hacking stuff, and making sure that you're paying it off in full every month or whatever the frequency is, so that your balance is always as close to zero as possible. Number two is making sure that you're paying your bills on time. So what they'll look at is typically they'll generate a percentage based on how many on-time payments that you would do. So if you've had a situation where you've owed 12 payments and then you've paid 11 of those on time and one of them wasn't on time, then your on-time payment rate would be 11 over 12 and whatever percentage that would work out to be. But basically your goal is to make sure that you literally never have a missed or late payment. So it's really important. A lot of the tips in regards to your credit is making sure that you don't let anything slip through, because sometimes you can not pay it because you don't have the money, but other times you may just forget the bill. You may have, I've had situations where I've moved house, forgot to update my address, didn't get the bill for months. And for me, I need to make sure that I go and address those things, make sure I pay it all off, and then contact whatever reporting agencies as well. And that leads into number three. So you want to make sure you fix any errors on your report. So if you go onto these websites and you pop in your details and then you notice, it'll tell you if there's any kind of bad things on your credit report. And once you check that, you need to make sure it's all accurate. So you might have stuff that's valid on there that you need to sort out, but there may be some things that are maybe invalid or not up to date. So you may have paid that bill, but then it is still lingering on your credit report. So what you need to do is make sure you contact them and let them know that it has been resolved and show them any proof that stuff's been paid. And then from there, they'll let you know whether A, it has been a mistake and we'll take it off, or B, we know that you've paid it, but we need to leave it on for a certain period of time. So tip number 4 is making sure that you keep, the average age of the accounts that you have. So ideally you have accounts with people for a long period of time. If you've got a credit card that you've had for years and years and years, sometimes that can be a good factor on your credit report. And for people that do credit card churning and they're always trying to get the points bonuses and that sort of stuff, your credit report's probably going to look a little bit worse than it really should be because of that, all those new accounts. But basically, if you have any, they'll look at kind of the average of all the different credit accounts that you have, and they'll kind of see that, this one's been 8 years, that one's been 4 years, this has been 2 years. And basically you want to make sure that you try where possible, try and keep those longer ones because that can really help your credit score. Number 5 is don't make multiple credit applications, especially within like a 12-month period or so. If you're constantly making applications for credit, it's not necessarily a bad thing because sometimes you may, like I said before, you might be trying to grow a property portfolio and you want to get multiple properties within, a year, which can happen for some people. You may get approved for all those applications anyway, but the challenge can be that it may not look good to the lender. Now, if you get approved for all those loans, that's a much better case. But if you're trying to apply for heaps of loans, you should only really be applying for stuff that A, you're going to get, and 2, try not to do unnecessary stuff. So, if you're trying to go for lots of home loans and trying to build your property portfolio, and you're also doing credit card churning, that's going to be a lot of credit card applications. And you may pass all of it, but it's probably not going to look that good. So you might want to decide how you time all those things. So if you are trying to apply for a lot of property loans, you might want to go easy on the other stuff so that it all evens out. Other things that can help can be things like getting approved for home loans. So if you get approved for a home loan, everybody knows how stringent a lot of those home loan applications are. If you do get approved for that, then it can be a good sign on your credit score to show that you actually passed all those checks. They looked into your stuff and it looked great. And generally they look more favorably on home loans and secured credit. So if you can get some sort of credit where it's backed by an asset like a house versus credit card, applying for credit card debt, which is unsecured debt, that can often look better. And also if there's a mix of credit. So if there's stuff like, a car loan that you've been paying, a home loan that you've been paying, a business loan that you've been paying, not necessarily always a good thing that you're needing loans for everything that you get. But if you do have a variety of credit and you've shown over time that you do pay all your stuff and you never have late payments, that can help your credit score. So it's a bit of a balancing act. You do want to get the credit, but you also want to show that you can handle it when given that responsibility. So I hope you found that useful. If you do have a crap credit score now, it's not the end of the world. And if you just follow these steps piece by piece over months and months and months, your credit score will keep getting better and better and better. And then after a while, you'll have an excellent credit score and you will get access to those excellent interest rates and be able to borrow the kind of amounts that you want to borrow. If you found that video useful, please give it a like, and if you feel like subscribing, do that. And other than that, I'll see you in the next video.